Warning: these social media platforms may be hazardous to your health. Censorship kills. Pain coming. This has been a PSA by Breaking Spectre. Well, good morning, everybody. How we doing? Spectre here for another edition of In Case You Missed It news on this now 21st day of October. Hopefully you guys are doing well. Progressing quite well into the fall season here. Seasonal temperatures around these parts here where I'm at. A little bit cloudy on the day. Looks like a chance of rain. I don't know if we'll actually get it though, but definitely in the fall season. Hopefully you guys are faring well as always. And of course, this morning on the broadcast, we're going to get into the rundown of the market. We're going to talk a little bit about housing. We're going to talk a little bit about the old middle class and how things are faring there. Number of things and a couple other odds and ends. And we'll see you back here on the other side in just a moment. Hey everybody, Spectre here. I want to tell you about my Teespring store that I just opened up with a handful of products in that for you guys, the listeners, the audience, those that are in chat on a day in, day out basis. Always appreciate your support, and I figured what the heck, we'll throw some merch out there for you guys. And so obviously with YouTube and Earth Shenanigans as of late, I'm going to be looking to expand to other platforms, and well, that all comes at a cost, so I figured what the heck. That being said, I got some t-shirts and that out here. You can see those in black, white, and gray. Spectre Does News. You got a water tumbler, 20 ounce there. Got a coffee mug you can get in black or white. And of course, we got the Let's Go Brandon #FJB shirt, which you can also find in black, white, or gray. Right now, you can find that all over at https specters-storefront.creator-spring.com. That's https://specters-storefront.creator-spring.com. Thank you for your support. All right. Appreciate you guys tuning in. As always, we'll just jump right in here this morning. Futures slide on stagflation fears as 10-year yields spike. U.S. index futures dropped after IBM and Tesla fell after their quarterly results, with investors turning cautious, awaiting more reports to see the adverse impact of supply chain disruption and labor shortages on companies, even as jitters remained over elevated inflation and the outlook for China's property sector. The dollar reversed an overnight drop while treasuries fell, pushing the 10-year yield to a 5-month high of 1.68%. 7:45 a.m. Eastern, Dow E-minis were down 98 points, or about 0.3%. S&P 500 E-minis were down 14 points, or 0.3%. And NASDAQ 100 E-minis were down 49.25 points, or also about 0.32%. And here we see that depicted on the old charts here as well. It says in the pre-market, Tesla fell 1% in pre-market trading. As it said on Wednesday, its upcoming factories and supply chain headwinds would put pressure on its margins after it beat Wall Street expectations for third quarter revenue. AT&T rose 1% in pre-market trading after exceeding Wall Street's expectations for profit and wireless subscriber growth. PayPal Holdings also climbed as it explores a $45 billion acquisition of social media company Pinterest, Inc., and what could be the biggest technology deal of the year. The Dow gained 1.1% after it posted a more than five-fold jump in third quarter profit as economic recovery boosted prices for chemicals. IBM plunged 4.7% after it missed market estimates for quarterly revenue, as its managed infrastructure business suffered from a decline in orders. Some other notable pre-market movers: Digital World acquisition surges 30% after the Blank Check Company agreed to merge with Trump Media and Technology. Former U.S. President Donald Trump says the new company plans to start a social media firm called Truth Social. And I'll talk a little bit more about that here a little bit later on in the broadcast. Denny's rises 1.4% as the restaurant chain is upgraded to buy from hold at Truist Securities, which sees upside to third quarter estimates, partly due to expanding operating hours. ESS Tech adds 4.6% as Piper Sandler says the stock offers a compelling entry point for investors seeking exposure to energy storage, initiating coverage at overweight. Some other big European movers today: Soitec shares gain as much as 7.3% in Paris, the stock's best day since June, after reporting second quarter results and raising its full year sales forecast. BioMariu shares rise as much as 5.9%. Sales in third quarter were well ahead of expectations on strong U.S. demand for BioFire respiratory panels, Jefferies writes in a note. Randstad shares rise as much as 4.7%, the most intraday since December 2020, with RBC saying the staffing firm's third quarter earnings topped estimates. Sodexo shares rise as much as 4.8% after activist investor Sachem Head took a stake in the French catering company, saying the investment is passive and that Sodexo is going activist on itself. Zero's shares fall as much as 8.1% after the Swiss online pharmacy cut its growth guidance and posted third quarter sales that Jefferies says missed consensus expectations. Nordic Semi shares drop as much as 7% after or before recovering some losses. After results, Mirabad Securities says any weakness in the stock is a great buying opportunity. Eurofin shares drop as much as 7.5%, the most in nearly a year, after the laboratory testing company left its 2021 EBITDA and free cash flow guidance unchanged, which Morgan Stanley says implies a lower EBITDA margin versus previous guidance. Bankinter shares fall as much as 6.6%, most intraday since December. Jefferies highlighted the weaker trend for the Spanish lender's third quarter net interest income. As far as 10-year treasuries, it looks like we're printing, all the way back to about May of 2014, perhaps. I guess that's what it's showing there. So treasury yields on the rise. Market snapshot, S&P 500 futures down 0.3% to 45.15 and change. Stocks Europe 600 down 0.2% to 469 and change. Nikkei down 1.9%, 28,708 and change. Shanghai Composite up 0.2% to 3594.78. Brent futures down 1% to 84.98 a barrel. Gold spot up 0.2% to 1785.09 per ounce. US dollar index up 0.11% to 93.67, and euro down 0.1% to $1.1639. Also, looking at Bloomberg overnight, China Evergrande Group scrapped talks to offload a stake in its property management arm and said real estate sales plunged about 97% during peak home buying season, worsening its liquidity crisis on the eve of a dollar bond deadline that could tip the company into default. Its shares plunged as much as 14% on Thursday. China's goods imports from the U.S. have only reached about 53% of the $200 billion worth of additional products and services it promised to buy under the trade deal signed last year, far behind its purchasing target. Signs that policymakers are accelerating toward an interest rate hike have traders fumbling around to figure out what that means for sterling. Money managers at Jupiter Asset Management and Aberdeen Asset Management turned neutral in recent days, following similar moves by Amundi SA and William Blair Investment Management. The price on 8 out of 10 bonds sold in the first 3 quarters of this year by European investment-grade borrowers fell after issuance, wiping almost 23.5 billion euros from portfolios. And the Turkish lira is looking vulnerable as speculation grows that policymakers will cut interest rates again, despite the deteriorating inflation outlook. Option traders see a more than 60% chance that the currency will weaken to an all-time low of 9.50 per US dollar over the next month, according to Bloomberg pricing. That's the next key psychological threshold for a market trading largely in uncharted territory ahead of Thursday's decision. And some more look at markets out of News Squawk. Back over to Asia. China vows to keep property curbs. Evergrande risk seen limited. Abu Dhabi funds hunt for Asian unicorns ahead of IPOs, according to ECM Watch. Biden's pick for China envoy draws sharp lines with Beijing. And Carlyle, KKR among among firms, there we go, says to mull $2 billion Tricor bid. Back over to Europe, Volvo warns more chip woes ahead will curtail truck production. Hermes advance after dispelling worries on China demand. Stagflation risk still means quick rate hikes for Czech banker. And Wiedemann exit could pave way for Bundesbank first female chief. Interesting. On the old event calendar, 8:30 a.m. Few things going on here this morning. October continuing claims estimated at 2.55 million versus a prior print of 2.59 million. October initial jobless claims estimated at 297,000 versus 293. October Philadelphia Fed business outliers estimated at 25, prior was a 30.7. 9:45 a.m. this morning, October Langer Consumer Comfort, prior was a 51.2. 10 a.m. this morning, September existing home sales, month over month estimate of 3.6, prior was down 2%. September lending leading index estimate of 0.4%, prior was 0.9, and September home resales with condos estimated at 6.09 million, prior was 5.88. And I'm going to have more to say about the jobless claims and all that here a little bit later as well. Aside from that, a quick look at the earnings and that coming out here today. Pre-open, we had AT&T, which we briefly spoke of. Southwest also on there. Ally, Valero, to name a couple. And then after the close today, we got Intel, Samuel Adams, Whirlpool, Carlisle, just to name a few. And then tomorrow we got a handful as well. So we'll be keeping an eye on that. So, in regards to home prices, China's home prices dropped for the first time since 2015 as existing home sales crash 63%. And so we just got done talking about Evergrande and what abysmal numbers and that they have seen. But yeah, the woes continue. 2 weeks after we reported that China's property market just suffered catastrophic property sales in September, which involved Goldman's hard landing scenario, and which saw total sales of 759.6 billion won plunge 36.2% from September 2020 and 17.7% lower from the same period in 2019, deepening a downward spiral that started in July with transaction volume of residential properties in Beijing, Shenzhen, and Guangzhou declining 30% year over year, while Shanghai fell 45%. The freeze in China's property market is starting to manifest in prices for what Goldman has dubbed the world's largest asset class. Overnight, China's National Bureau of Statistics reported that China's home prices fell for the first time in 6 years, as the property slump deepens in the world's second largest economy. New home prices in 70 cities, excluding state-subsidized housing, slid 0.08% in September from August, the first drop since April 2015. Values in the secondary market declined 0.19%, down for a second month. Some more details out of Goldman. Average housing prices in the primary market edged down 0.5% month over month annualized in September, the first sequential decline since April 2015. And it says much fewer cities saw higher property prices in primary and secondary markets in September. There we see that. Major cities inventories month. Sellable gross floor area divided by 12 months rolling gross floor area sold rose marginally to 11.1 in September from 10.7 in August. There appears to be some marginal easing on mortgage extension in September, as suggested by the acceleration in household mid to long-term loans after the People's Bank of China's window guidance in late August and late September. Echoing what we said about 2 weeks ago, Cakeson notes that a slump in the home market is becoming more evident as developers, including China Evergrande Group, struggle to raise money and buyers stay away. And since 70% of China's net worth is parked in housing, and since China's citizens have not encountered a drop in home prices since 2015, falling prices may fuel a vicious cycle by further weakening demand, worsening the cash shortage at builders and forcing them to offer bigger discounts. Flashing forward here, says the new home market faces relatively big downward pressure in the short term. Yang QE, a research director at China Real Estate Information Corp, said before the figures were released. The effects of price discounts are waning. Last but not least, says that will have a knock-on effect on the broader economy since Goldman Sachs Group Inc. estimates the property sector and related downstream industries make up almost a quarter of gross domestic product. So things not looking all that hot for China at the moment, but we'll have to keep an eye on where that goes at this point with old Evergrande and company and the contagion. So goodbye, middle class. 50% of all U.S. workers made $34,612.04 or less last year. This by Michael Snyder out of the Economic Collapse blog. Says if we keep going down this path, soon we won't have much of a middle class at all. When I first started writing about the economy many years ago, I often wrote about the tens of millions of working poor Americans that were enduring so many hardships. But at this point, most of the nation now falls into the working poor category. That isn't because wages haven't been going up. Little by little, wages have been incrementally rising year after year. But meanwhile, the cost of living has been absolutely soaring. Paychecks have not even come close to keeping up with inflation. And this has been eviscerating the middle class. Today, the majority of the country is in constant survival mode financially, and that isn't going to change anytime soon. It says, when I was growing up, retailers that catered to the middle class did exceptionally well. My mother was constantly taking me and my siblings to J.C. Penney and Sears, and it seemed like that was where virtually everyone shopped. But now, such retailers are rapidly going extinct. Today, the retailers that are doing well are those that cater to the very bottom of the economic food chain, Walmart, dollar stores, etc., or those that cater to the very top of the economic food chain. And that is because there isn't much in between those two extremes anymore. The Social Security Administration has just released final wage statistics for 2020, and they are extremely alarming. According to the figures that they have given to us, the median wage for 2020 was just $34,612. By definition, 50% of wage earners had net compensation less than or equal to the median wage, which is estimated to be $34,612 for 2020. It is really depressing to think that half of all U.S. workers made 34 grand or less last year. That is less than $3,000 a month, and that is before taxes. Needless to say, trying to survive in a major U.S. city on that kind of income is not easy in today's economic environment. Of course, $34,612 would have been a very nice yearly income back in, say, 1960, because back then the cost of living was much lower. The following comes from an article authored by Emin Gordon. In 1960, for example, a gallon of gas cost 31 cents a gallon. Similarly, in 1960, a gallon of milk cost $1 a gallon. Currently, the average price of gas and the average price of milk are $3.28 per gallon and $3.68 per gallon, respectively. That's upwards of a 958% increase for gas and 268% increase for milk over the last 60 years. Back in 1960, you could buy an entire house in a nice middle-class neighborhood for 34 grand. Today, that would barely be a down payment on a dilapidated shack in many parts of the country. In recent weeks, I have frequently pointed out that there are millions of jobs available in the U.S. right now, but the vast majority of them are highly undesirable because they pay working poor wages. So many people out there are working as hard as they can, and they still can't make ends meet. In fact, one recent poll discovered that 59% of Americans that make less than 50 grand a year have experienced serious financial problems in the past few months. The poll showed a sharp income divide, with 59% of those with annual incomes below 50 grand reporting serious financial problems in the past few months, compared with 18% of households with annual incomes of 50 grand or more. As I have discussed so many times over the years, we have gotten to a point where most of the population is living paycheck to paycheck. And when you are living paycheck to paycheck, all it takes is one bad break to push you into financial distress. Sadly, things are going to get even worse for ordinary Americans in the coming months, because inflation continues to rise very aggressively. Yeah, remember all that talk that Jerome Powell, head of the Fed, says it's transitory? Yeah, right. BS. Inflation accelerated in September, with consumer price pressure across America showing no sign of easing ahead of the all important holiday shopping season. Consumer prices increased 5.4% from the year ago period, slightly faster than their 5.3% increase the previous month, and on par with the increases in June and July. Needless to say, those numbers actually greatly understate what we are facing, because the way inflation is calculated by the government has changed dozens of times over the years. As I am constantly reminding my readers, if inflation was still calculated the way it was back in 1980, it would already be well into double-digit territory. In other words, the sort of inflation that we faced during the Jimmy Carter era is already here. And CNN just admitted that prices aren't coming back to Earth anytime soon. If prices continue to rise much faster than paychecks do, the middle class will just keep getting smaller and smaller and smaller. Sadly, politicians seem determined to hasten the demise of the middle class by pushing millions more Americans out of decent paying jobs in the months ahead. But in the process, they will also be creating critical staff shortages. For example, just consider what just happened at a hospital in Lewiston, Maine. The administration of Central Maine Healthcare in Lewiston, Maine enacted a vax policy demanding all employees to take the jab, but more than 250 employees refused to comply before the deadline. These employees were subsequently fired. Unfortunately for patients, about 170 of those employees were needed to staff the intensive care unit. Consequently, the hospital had to shut down its ICU because of the firings. Because it lost so many employees, the hospital plans on cutting intensive care beds by 50% and reducing the number of medical surgical beds by 40%, the Bangor Daily News reported. Isn't that nuts? Of course, the same type of scenario is playing out at hospital after hospital all over the country right now. And you can't just hire random people off the streets to be doctors and nurses, because it takes many years of training to become a doctor or a nurse. So let us hope that we don't have to deal with any sort of a major health crisis this winter, because our medical system would become overwhelmed very rapidly. These are such ominous times for our economy, and these are such ominous times for our nation as a whole. In the months ahead, there will be more inflation, more shortages, and more questionable decisions by our leaders. And I should probably use air quotes around that. But events are truly beginning to spiral out of control, and America will never be quite the same ever again. And so, to that end, my advice is to all these nurses, doctors, and that are being laid off, start your own practice. Period. We don't necessarily need these systems and that in place at this point. Jabbed, unjabbed, whatever, doesn't matter. We can run a parallel economy. And what we're quickly going to find is that we'll break them down fairly quickly if people just stand up and do it. Aside from that, in deep ship, Biden weighs National Guard to address record number of vessels off LA. I've had a lot to say about that over the last several weeks about the various cargo ships stationed off of LA and Long Beach, but it's becoming impossible to ignore just how unprepared the Biden administration is in tackling the current shipping crisis and its impact on domestic supply chains and state economies. A significant backlog of container ships continues to pile up at LA and Long Beach ports, even though President Biden issued a directive last week to keep both ports, which account for 40% of all shipping containers entering the U.S., operating on a 24/7 basis. Now, the admin is so desperate that they're weighing the use of the National Guard to alleviate stretched supply chains so that Americans will hopefully get their consumer goods before the holidays, according to AP News. And of course, we already know from articles passed over the weeks that they're not technically running on a 24/7 basis. They had been running 24/4 with weekends off, so not exactly as stated, is it? Jim Scudo says our global supply chain bottleneck in one photo, Port of LA from the air today. And obviously you can see the number of container ships and that all sitting berthed and waiting to hit the bay and unload. Says with a record 97 container ships at anchor across the ports of LA and Long Beach, congestion at the nation's top ports worsens. To alleviate bottlenecks threatening the holiday shopping season, the White House released a directive last week advising both ports to operate on a 24/7 basis to counter the backlog. For some context, the ports typically have 17 ships at anchor in pre-pandemic times. So with 97, it only suggests Biden's plan is too little, too late, explained one U.S. importer of toys. And yeah, it's a quagmire going on there. We'll flash over to that here at the end of the article and take a peek. The admin is searching for other ideas to alleviate port congestion, according to Washington Compost, citing three sources. Biden's team has explored whether deploying the National Guard at the ports would quell overwhelmed supply chains. One source said the admin has not considered activating the National Guard at a federal level, but could soon deploy guardsmen on a state level. They may take a page out from the UK when they deployed troops to resolve gas shortages last month. What's likely to happen are guardsmen with licenses to operate heavy machinery or trucks could be deployed. Much of the port congestion is due to the relentless, fiscally stimulated demand for made in China products by Americans, all thanks to the government handing out hundreds of billions of dollars in stimmy checks. Labor shortages at ports have also been another issue, which originated when the Biden administration began paying people more money to sit on their couches than work. AP notes that a trade group representing clothing manufacturers has requested the National Guard or even naval ports to unload cargo. And so real quick, we'll flash over to the old ports and see how things are faring there. And of course, they're now citing that there's 97 container ships net sitting out there. And it looks to be quite messy, certainly. But yeah, we don't necessarily have to count all the green dots. The green dots here are all the various container ships. Red dots are the fuel carriers, things of that nature. And so we can obviously see that it is pretty well jam-packed in there. These guys are all probably anchored, and these guys sitting out here are all floating, waiting to get in. So yeah, the problems persist. Will the National Guard help that cause? To be determined. So, aside from that, prepare for the worst. Caribou coffee panic hoards Arabica beans amid global deficit. And of course, we've talked a little about the coffee shortages and that as well over recent weeks. Brazil has certainly had their fair share of weather issues and that, cold snaps, too much rain, things of that nature. Also had shortages of shipping containers, all sorts of things that have caused this to stack up. U.S. restaurant chain Caribou Coffee Company is panic hoarding coffee beans as a global supply deficit grips the world and fuels inflation. We continue to increase safety stock on key items, CEO John Butcher told Bloomberg. Besides coffee beans, he said the company is loading up on cups, lids, packaging, chocolate, and anything that comes to mind as supply chains remain snarled. Butcher said, "My gut tells me to hope for the best and to prepare for the worst. I personally don't see any reason to believe that supply chain disruptions are going to go away anytime soon. Everybody is in the same boat. They're hopeful that things will improve by the end of 2022. But for now, we have to prepare as though they won't," he said. Caribou, now part of Panera Brands, has approximately 450 U.S. locations and plans to expand its franchising program in 2022. However, an emerging global supply deficit of Arabica coffee beans, something we first warned in March and later explained in May, disruptions of logistical networks around the world caused by container shortages and port congestion, will continue to elevate coffee prices higher for longer. Arabica coffee prices have soared to fresh decade highs this week, as news of the global supply deficit paints a grim outlook for 2022. Some of the deficit originated in Brazil, one of the world's top coffee producers, as droughts and frost crushed crops. And here we see graphically that we're probably not seeing those levels for beans, pointing back to probably about 2010, 2011 timeframe. Says we believe in a deficit of around 4 million bags. Other analysts see it as high as 7 million bags. Carlos Mera, head of Rabobank's commodities desk, wrote, adding that exports from Brazil and other top producing countries are slowing. If Caribou is panic buying coffee beans, imagine what Starbucks and other larger chains have been doing. Yeah, that's exactly right. So, again, if you are a coffee drinker, myself included, I would imagine that the proper thing to do right now would be to stock up. Because chances are, whether or not you like your little K-cups, whether or not you like your freshly roasted beans, what have you, that you can brew on your own, my guess is on a per pound level, the prices are going to go sky high. So aside from that, despite surge in California, initial jobless claims slide to post-lockdown lows. So as I mentioned in the opening article here, I thought I'd have more to say about that, and here it is. For the second straight week, the number of Americans filing for first-time unemployment benefits was below 300,000, came in at 290. This is the lowest since the pandemic lockdowns began. And so there we see that chasing all the way back to about March of last year. Sourced out of Bloomberg here says last week's initial claims was dominated by California. Interesting. I wonder if any of those claims pertain to any port workers by chance. And we see Tennessee, Florida, Georgia, Iowa, Alaska kind of rounding out the top few there. And on the bottom half of the graph, we see that Virginia, Michigan, Pennsylvania, Texas, Ohio, Kentucky, all seeming to fare much better. Continuing claims continues to fall to post-pandemic lockdown lows. The total number of Americans on some form of government dole continues to slide as pandemic aid is cut off. And here we've talked about this. It's dropped off significantly since probably the old stimmy checks net have gone away at this point, and we've seen the jobless claims drop precipitously. In fact, there's just over 3.2 million Americans now receiving benefits, at least according to these figures. It says, who could have seen that coming? Stop paying people to sit at home, and suddenly they will try to get a job. Yeah, funny how that works, isn't it? Old Nancy, scraping some scraps and crumbs off the old table for the plebes out there, right? Stay home, mask up, be afraid, don't go to work. And lo and behold, that's what we're left with. Outside of some financial news, as I mentioned, Trump is firing up a new social media platform here, apparently. Out of Insider Paper here, Trump announces new social media site, Truth Social. What's you guys' thoughts on this? You think this is going to be good, bad? What's your thoughts? Donald Trump announces Trump Media and Technology Group and a social media network called Truth Social to rival big tech. I created Truth Social and TMTG to stand up to the tyranny of big tech, Trump said in a press release on Wednesday. I am excited to send out my first truth on Truth Social very soon. And it says Truth Social. Read more about new social media site by Trump out of Palm Beach, Florida, yesterday. Trump Media and Technology Group and Digital World Acquisition Corp. have entered into a definitive merger agreement, providing for a business combination that will result in Trump Media and Technology Group becoming a publicly listed company, subject to regulatory and stockholder approval. The transaction values Trump Media and Technology Group at an initial enterprise value of $875 million, with a potential additional amount earnout of $825 million in additional shares. At the valuation they are granted, for a cumulative valuation of up to $1.7 billion depending on the performance of the stock price post-business combination. Trump Media and Technology Group's growth plans initially will be funded by DWAC's cash in trust of $293 million, assuming no redemptions. Trump Media and Technology Group's mission is to create a rival to the liberal media consortium and fight back against the big tech companies of Silicon Valley, which have used their unilateral power to silence opposing voices in America. Trump Media and Technology Group will soon be launching a social network named Truth Social. Truth Social is now available for pre-order in the Apple App Store. Truth Social plans to begin its beta launch for invited guests in November 2021. A nationwide rollout is expected in the first quarter of 2022. Those who are interested in joining Truth Social may now visit www.truthsocial.com to sign up for the invite list. President Donald J. Trump, the chairman of TMTG, stated, "I created Truth Social and TMTG to stand up to the tyranny of big tech. We live in a world where the Taliban has a huge presence on Twitter, yet your favorite American president has been silenced. This is unacceptable. I am excited to send out my first truth on Truth Social very soon. TMTG was founded with a mission to give a voice to all. I'm excited to begin sharing my thoughts on Truth Social and to fight back against big tech. Everyone asked me, why doesn't someone stand up to big tech? Well, we will be soon." So there you have it by way of DJT. We'll click on that, see what comes up here. Apparently this is the sign-on page. Obviously, if they are on Apple, isn't this going to have the same sort of effect as what Parler experienced at the beginning of the year? I don't know, just a thought. Love to hear your thoughts on that as well. But yeah, I mean, at the end of the day, if there isn't some level of censorship or acquiescence to big tech, then what's to say that Apple Store isn't just going to say, poof, gone? Well, where do you go to find it now? I don't know, just a thought. Aside from that, heading over to Just the News, House January 6th committee votes unanimously to hold Bannon in contempt for not complying with subpoena. I say good. He did exactly what he was supposed to. Why would he acquiesce to this sham hearing? Kind of like the sham impeachments of DJT, right? The Dem-led House committee investigating the January 6th Capitol riot voted unanimously Tuesday evening to hold former Trump ally Steve Bannon in contempt for failing to comply with the panel's subpoena. Several members for former Trump president's inner circle recently have been subpoenaed by the committee for documents and testimony. However, Committee Chairman Benny Thompson, a Mississippi Dem, says Bannon stands alone in his complete defiance of our subpoena, and the panel will not take no for an answer, according to the Associated Press. The full House is expected to vote Thursday on the contempt resolution. If passed, the resolution goes to the Justice Department, which would then decide whether to pursue criminal charges against Bannon. The contempt resolution asserts Bannon, fired by Trump in 2017, and now a podcast host, has no legal standing to rebuff the committee amid the argument his information is protected by the privilege of the former president's office. The committee, which includes two Republicans, not really, says it is pursuing Bannon's testimony because of his reported communications with Trump ahead of the siege. His efforts to get the former president to focus on Congress voting January 6 to certify the 2020 presidential election results, and his January 5th comment that all hell is going to break loose the next day, the wire service also reports. No word yet out of Bannon whether or not he should, in my opinion, cite what took place down in Maricopa County. Aren't they kind of setting a precedent there? You know, you got the folks down in Maricopa County subpoenaing various folks and that to try and get the modems and whatnot for the election-related stuff going on down there. They just bypassed it, disregarded it. No teeth to it. So why would Bannon do anything different? I mean, what's good for the goose is good for the gander, right? Just a thought. Aside from that, to close things out this morning, over to Disclose TV. This came through, it says new. The Lancet, the medical journal that made a U-turn over the COVID lab leak theory, warns in a new report about the health impacts of climate change ahead of COP26. And here they highlight the Lancet post as new. The health impacts of hashtag climate change are worsening in all world regions and exacerbating inequities. At COP26, decision makers must show leadership and deliver an equitable green recovery from COVID-19. So there you have it, the Lancet. Yep, I think you can safely say that they are bought. And oh, by the way, for the COP26ers, how many people are going to be flying their jump jets over there? And how much CO2 are they going to be uh, emitting rather, into the atmosphere as a result of this little junket? And by the way, how many diesel engines are they going to have to rent to charge up their battery-operated Teslas? Right? Ridiculous. Absolutely ridiculous. All right, well, that is going to do it for the broadcast this morning. Appreciate you guys tuning in as always, and we'll see you back here this evening. I'll probably fire up the stream and simulcast the show tonight as I'm over on the Soapbox. You can tune in at 9 p.m. Eastern tonight, where I'll kick that off immediately after Radix's show. Haven't decided what I'm going to cover yet, so I'll have to play that a little bit by ear, see what shakes out here. But do tune in at that point, and we'll see you back here a little bit later on this evening. Take care. God bless, everybody.